Hi everyone, welcome to the best real estate investing advice ever show. And we've got a Facebook Live that we're doing, and we're also about to record our episode for Follow Along Friday. So looking forward to jumping into the conversation. We got a lot of listener questions, and I also have a lisp today because I got back from the dentist about 20 minutes ago and half my face is numb right now. So bear with me if I sound a little bit different or end up slobbering on my mouth, which I feel like I am right now. All right, ready to rock?
Let's do it, Joe.
Okay. Best ever listeners, how you doing? Welcome to the best real estate investing advice ever show. I'm Joe Fairless. I'm with Theo Hicks. If I sound different, I just mentioned to Theo that is because I just got back from the dentist and about 20 minutes ago and half my face is numb. So I am drooling all over myself as we do this episode to give you a nice visual. So Theo, we got some listener questions that we're going to be talking about and answering, and then some updates, and I think we should go ahead and kick it off. It's good to be back.
Yeah, it's great to have you back, Joe. You've been gone for a couple of weeks.
Mm-hmm.
I'm looking forward to asking a couple of questions about your vacation. But yeah, we're going to change up the order a little bit today and just dive straight into listener questions. And most of these questions are around performing due diligence on an apartment building. So that'll be kind of the main theme of the episode. So we got questions from 3 different people. The first one is the first set of questions are from Carolyn. And her first question is, what happens during the due diligence period between getting the property under contract and close?
Well, we have 10 steps that you will complete, and we'll go through those. We have them written down. The high-level answer is that you qualify the property based on your assumptions that you've made in underwriting, and you see if anything is different from the assumptions that you made. I think I just bit my tongue. And see if anything is different from the assumptions that you made. So ultimately, it is a fact-finding period, and if you find facts that don't align with what you assumed going into it, then you renegotiate or back out or move forward, and knowing that you've got a different set of assumptions or facts that you're dealing with. So if I can see this, please. We wrote down top 10, or not top 10, but 10 things that you need to complete from a report standpoint for the due diligence process. And keep in mind, this is for apartment communities. If we're talking single-family homes, then it won't be as robust of a process. So we're talking specifically apartment communities. If it's hotels, if it's industrial, I don't know. I've never closed on any of that stuff. So find someone who has. But if you're asking about apartment communities, which it was not... It wasn't mentioned exactly what you're referring to, but I'm going to assume you're talking about apartment community. So number 1 is a financial audit. Really important. One of the lessons I learned on my first property is the importance of identifying occupancy versus economic occupancy. And the financial audit will determine that. And how you will do that is ideally you hire a third-party company to do that for you, and they will look at the bank statements and juxtapose them with the financial statements that were provided, and also with the rent roll to make sure they all line up. And perhaps juxtapose is the right word, maybe cross-reference is the better word. So you want to do the financial audit. That's number 1, to determine if there are any discrepancies in the financial statements that are being reported and what's actually being generated by the property. Huge thing that you need to take into account. Number 2 is a internal property condition assessment. Basically, you want to take a look at the property, and assess all the areas that need to be fixed and areas that need some fixing perhaps in the near future, and then what is operating properly. We hire a third-party company to do that for us as well. Number 3 is a market survey and condition report. The main purpose of this is to make sure that the rental assumptions that you have are accurate and that your assumptions are conservative and they're hopefully not the market leader for what you anticipate your rent to be. And that market survey is typically done by your property management company. We meaning Theo, myself, Frank, my business partner, and within the Ashcroft team, we always do this market survey ourselves prior to getting it under contract. We call up the comps. In addition, when we visit the property before we have it under contract, we go visit the comps. But in addition to us doing it, we have our property management partner do it as well to make sure there's nothing that we're missing or that they're missing. File and lease audit. You'll need a company to do the audit of the rent or the leases and the lease contracts and make sure that they are accurate and reflective of what they're actually paying in rent, and there's nothing out of the ordinary. And I know from your closing, you came across something like this. Remember what happened again?
Yeah, I should have done the lease audit on my property. Just the rents that we were verbally told were not the same as the rents that were on the leases.
They were higher,
not the same as the rent that we actually were receiving. So we were told one thing that was a middle number. The leases were the lowest number, and what we actually got was the highest number.
That's beautiful. That's beautiful. Normally, it doesn't end up good when you don't do the lease audit. In your case, it ended up as a favorable outcome. 5 is a unit walkthrough. Surprisingly, I get a question every now and then of do we need to walk through every one of the units? Yes, we do. We have to walk through every one of the units. The ones that we're not getting access to, those are the ones we should be most suspicious of. Mm-hmm. The dog, they can't get a hold of the resident because there's a dog and they can't pin the dog up. The resident works third shift. The resident is out of town and the locks don't work. All these excuses you're going to hear, and all these excuses you're going to have to push aside and say, I know, but in order to close, I still need to see the inside of the unit because we've got to do our inspection of the interior.
It's another quick example of that, because I was going to talk about this during my updates, but I might as well do it now because it's relevant to this. This happened to me for my properties too, because there's 12 units, and we got into every single unit during the inspection and the appraisal period, except for one unit. And I'm just like, whatever. Like all the other units, they're fine, and there can't be anything that's too wrong that'll cost too much money. And so I didn't see it. And then luckily, again, I got lucky, but you know how like the water bills are staggered quarterly, mm-hmm. And so we bought the property in July. We got our first water bill at the end of August. And I'm looking at it, and they come in, and like the first one is what I expected to be, and the second one's what I expected to be, and the third property it's like 3 times as high as all the other properties for the month. I was like, what is going on? So I go over there with a plumber because we assume there's a leak somewhere for the water bill, and we go in the basement. We can hear water running through the main sewage line, and we go to the unit above it, and there's no leak in there. And then we go to the unit above it, and it clicks. And it's like, oh my god, I've never seen this unit before. And we go in there, and literally his faucet is just running like full go, like it's not like full go. Like I turn it off and on, it didn't change at all. And he said it's been like that since he moved in, and I had no idea. And I just text him. I go, hey, do you mind if we get into your unit? Do you think there's a leak in there? And he's like, it's been leaking since I got here. I've been telling you people to fix this leak. And I was like, oh, well, thanks for telling me now. So we got in there, we had to replace the entire vanity, and now I'm looking forward to, based off of how much money we're losing from water, it'll pay the repairs and the vanity will pay for itself. in a month.
It was just going full on.
Full go water.
Oh man! For how long? How long did you live there?
I think he had been there for a couple of months. I was like talking to him, and I was like, did you ever bring this up to the last owners? Like, yeah, I told them one time, but then when they didn't reply, I just figured they'd figure it out when they saw the water bill.
Gosh.
Like, well, I did. So,
Gosh.
So yeah, make sure you do a walk through every single unit, because
yes,
you don't want something like that happening to you, especially if you pay for utilities.
Number 6, yeah, if there was a RUB program, ratio utility bill back system, then that resident would have been hounding. He would have found you at where you live and be like, hey, listen, I need this fixed because I'm having to pay for it. Number 6, site survey. This just shows the boundary of your property, and it shows that where your property line is, etc. Number 7, property condition assessment. This is done by a third party that the lender selects. So the lender does their assessment. 8, environmental site assessment, making sure that there's not any environmental issues that are present. 9, appraisal. You know what the appraisal is. And number 10 is a green report, which evaluates the potential energy and water conservation measures on the property and estimates the initial investment and the cost savings to do so. So those are 10 things. I told you high level what you're looking for, and then got very granular in there, the 10 things for that. Carolyn, you also asked, how is the current and future property management transitioned? Well, when we close, let's say we close at 4 p.m. on a Tuesday, at 3 p.m. on Tuesday, our management team is outside the gate of the property. And at 4 p.m., as soon as they get word, we are on the property, and we're managing the property right out of the gate. We have a process leading up to that point to make sure that they have all the information they need, and that's why they're so involved in the due diligence process, because they'll be familiar with the property and segueing into it versus it being just something that happens out of the blue. Number 3, how do you determine the renovation plan? How do you estimate costs? The renovation plan is determined. Let me answer a larger question. How do you determine the business plan? And the business plan is determined based on the market and what you can do within that market. And a renovation is one component of the business plan. So how do you determine the renovation plan? You look at where's the market at, and you see what can the market support in renovations. Some renovations will be higher end, some won't be as higher end. And as far as the estimate of costs go, well, 2 things. 1, you should have a team member, either yourself or someone on your team, who can do renovation estimates for what is needed. And then you also need, not want, but you need to have a on-the-ground management partner who can also provide those renovation estimates independent of yours, and then you give them yours, they give you theirs, and then you see what are the differences, any discrepancies, and then you reconcile.
Awesome. So that wraps up Carolyn's questions. Next, we have got a couple of questions about doing due diligence on a market from Sylvia. And she said, I am new to investing and want to do my due diligence in choosing a stable market in which to invest. I appreciate your methodology and how you choose your market.
And I'm thinking, since she's new, I'm thinking she's talking single families,
yes,
is my guess.
Yeah.
And
she says, so just looking on the Bureau of Labor Statistics website, specifically the regional home pages, is this where I get my data to see job growth for the region in which I would like to invest? Or is there something better? As far as I know, the Bureau of Labor Statistics does have employment data and job data, but I like to get all my information. I like to get all my information from one one place because they're just pulling their information from the Census Bureau anyways. Is I like going straight to the raw Census Bureau data to get all my market information. Since you kind of asked, what's our methodology, the exact factors that we look at, there's 7 of them. We look at unemployment, specifically the 5-year unemployment change for the market. We look at the population growth over 5 years for both the city population, but also the larger metropolitan area, or that they call it the MSA. We look at the population age growth, and so we look at on the census you can get the age ranges, and then you can see how that's changed year after year, and that kind of helps you know what type of property may or may not be in demand.
And you want to look for millennials, or I don't know what the generation is who's 20 years old, but 20 to 34-year-olds, that's our ideal renter population. So you want a larger population representation of them relative to others and relative to other markets.
And then we look at job diversity, which you mentioned, and yes, you can find that on the Bureau of Labor Statistics, but you can also find it on the Census Bureau. And here again, it's just it'll have what the industry is, like healthcare or public services, and they'll have a percentage of the population that's in there. And kind of, as we talk about on a lot of the podcasts when we're talking about market, you don't want to see a industry have more than 25% of the jobs, because if that industry were to take a hit, then those jobs will be affected.
2 extreme examples: Dallas-Fort Worth, 14% is the industry that has the most, so it's incredibly diverse. That's why we love Dallas-Fort Worth, and that's why we're buying in Dallas-Fort Worth. And on the opposite end of the spectrum, Las Vegas, 28% hospitality. Obviously, hospitality, right? In Las Vegas. And so it's heavy-handed in tourism and that industry. And so, you as you said, you just don't want it to be heavy-handed in one. You want ideally to be as diverse as possible.
And then that also comes to relating to number 5, which is you want to look at the top 10 employers. So similar to job diversity, if you look at the top 10 employers and there's one company that has all the jobs, that's something to look into as well. And then you want to look at some supply and demand factors. And so for demand, you want to look at the rental vacancy rates. And again, this is something you want to track over time. And then you also want to look at the number of building permits for 5+ unit buildings. That's how the census breaks it down. And then number 7, kind of just anything of noteworthy for that market. So Google that market name, Google business in that market, unemployment in that market, and see what other information you can find on that market. Any new jobs that are coming there, new development, things like that. And so what you want to do when selecting a market, you want to kind of just pick seven different markets at least, and then make a spreadsheet, and then log all the data for the 7 different markets for all these factors, and then compare them across to see how unemployment maybe is trending downward for this one, but is trending more downward for this market. And this market over here has got really poor demand. And so you want to do that and kind of analyze and compare, and then write out your market insights for those markets in order to select which one is the best. So I kind of hit on all of her answers to all of her questions, but I'll read them anyway. So to find employment diversity, would you look at the Wikipedia page for the specific area I'm researching, or is there something better? So again, for the job diversity, for those percentages of population in certain industries, that you can find that on the census. For those top 10 employers, that might be something you can find on Wikipedia. I recommend just Googling the city name plus top employers, and somewhere in that city it'll be logged, whether it's done by the city itself or some journal in that city recorded that information. You'll be able to find that somewhere on the internet. And then finally, she asks, will you recommend an article or book that will enlighten a new investor to analyze markets? Thanks for taking the time to answer these questions. And so there are a lot of different market reports that are released every year on an annual basis or a biannual basis. And I know Marcus and Millichap has a really good one. If you just Google, Marcus and Millichap market analysis. I know another one that we use is a cap rate survey that's done on a biannual basis by CBRE North America.
And these are all free reports.
Yep.
You just search, Google it, and you'll find it. You might have to put in your info, give them your address, even your email address.
Another report you can read is by IRR. It's called the Commercial Real Estate Trends Report. And then there's two more. Another one is by Zillow. And this one's actually more for understanding the consumer, so understanding the demographics of the type of person that's going to be renting, or who wants to rent and why they want to rent and what they want when they're renting.
And what do they search for to find that one?
A Zillow Consumer Housing Trend Report.
Okay.
And then the last one, so I said Marcus and Millichap. So again, you'll get different information from all of those. You'll get overall trends of the real estate market. You'll get it specific to multifamily. You'll get it on the consumer end. So I'd recommend just reading those reports.
Mm-hmm. Yeah, and that is, we hooked you up with, definitely more information you need if you're investing in single family. If you're investing in multifamily, you just got the whole kit and caboodle for what to look for and trend and reports to look at. If you're investing in single family and you're looking for a market, then those 7 items that Theo went through are relevant. And the thing to keep in mind is, if you're not going to manage it yourself, the management partner is critical to your success. So I would personally, if I had to choose between a A+ market and a B- property management company, I would rather have a B- market and an A+ property management company, because in the long run they'll save you money, and I believe you'll be better off. So put a high premium on finding the right management partner in your area.
Awesome. So that wraps up Sylvia's question. The last person who submitted a question was Logan, and he said, "I have a specific question on raising money for a deal. You said that you want to get a commitment from people and have the money lined up prior to finding a deal. This is opposite somewhat from the way single-family housing is done, as you know. So my question is, in order for these brokers to take me seriously, also for my own knowledge, should I be asking for my potential investors to provide me with the proof of funds for the money when they say they have to invest?"
In order to get started, you likely will need a proof of funds in order to show brokers or sellers directly that you have the ability to close. I did a video on this. It's a less than 2-minute video. In YouTube, search Proof of Funds Joe Fairless. So search Proof of Funds Joe Fairless. And the less than 2-minute video will tell you exactly how to acquire the proof of funds. I'll give you the Cliff Note versions right now, because I know your time is valuable. And that is, go to an investor of yours, ask him or her to provide a screenshot of their bank statement that shows the amount that you need in order to close on whatever deal you're working on. Or maybe you just want a bank statement so that you can make offers on many deals. Just have a price range so you know how big of a bank statement you need. Then have them mark out their info. And why they do that for you, 1, they just might be a nice person. But 2, if you need to compensate them, then what I did for one of my investors is that I paid him $5,000 after we closed on an apartment community. So I was only paying him after I received money from closing on a deal. So he did not receive a penny until I closed on a deal. Then once I closed, I gave him $5,000 from the closing proceeds that I received. And he loved it. It's a great way to build loyalty with a large investor of yours. So that's one way. Depending on how big your deal is, instead of $5,000, maybe it's $500, maybe it's $100. I don't know. Maybe it's free. Maybe they just want to help you out. That's just one specific example for what I did, and you can take that structure and then rework it however you see fit.
And the person needs to that's going to be giving you their bank statement. The amount of money they need in their account is what's going to be required as a down payment for the property.
Yeah, the equity that would be required.
Okay.
So if you're looking for $1 million property, then if let's say 35%, 25% down payment, 10% miscellaneous, closing costs, etc. So $350,000 proof of funds for $1 million properties. So use that 35% rule, and you'll be good.
Awesome. So that wraps up the listener questions. Now we're moving to some updates we have. So we even had done this for what 2-3 weeks now.
2-3 weeks. Yeah, I was in Italy and at the dentist and all sorts of fun things.
I was gonna ask you, what was the most enjoyable part of being in Europe? Is that your first time going over there?
First time.
Okay.
It was eating lasagna for lunch and dinner 7 days in a row.
Really?
Yeah, I love lasagna. I love Italian food. Yeah.
I love lasagna too.
In Italy, yeah, eating lasagna in Italy for 7 days in a row for lunch and dinner.
And did you try different lasagna at different
Oh
restaurants?
yeah, everywhere. Yeah, the best one I had was in Venice, and it was just right on the water, and it was delicious. The worst one I had no meat sauce in it at all. It was just lasagna noodle, which I didn't realize that's what lasagna is, the actual noodle. I thought it was the big meat chunk and everything. It's just like a flat, a millimeter tall of like 3 pieces of noodle with some pesto sauce in the middle. I was like, someone deflated the lasagna. I don't know what happened here, but that was it was pretty authentic from what I was told, but didn't satisfy my appetite.
And then anything else from a business perspective?
One thing I noticed, and this is a business perspective, for anyone who, we'll see how it applies to real estate, but certainly any entrepreneur who has a restaurant or something like that, and that is, it's so obvious that when a group of people are sitting down at a restaurant, it attracts more tourists to that restaurant. Compared to if the restaurant has 0 people, that restaurant takes a long time to get people to gravitate towards it because no one wants to be the first person sitting down. We witness this time and time again. There would be 2 restaurants, both empty. Colleen and I would just randomly choose to pick one. And then once we sat there, over the next hour, the place would be packed. And the other restaurant, 0 people. And we did this randomly. And we did it like 4 or 5 times. And just people see, oh, well, they're eating there. And they're eating there. Okay, we'll eat there too, must be good. And there's no rhyme or reason. So my idea for them was if I'm a local restaurant owner and what I would do is I would pay someone, a couple, or 2 people, whatever, to just sit there, have a bottle of wine. I'd comp their wine, and that's it. And then it would they would make a 10 times return on their investment, paying for a $30 bottle of wine and some bread and maybe some cheese, whatever. It's a business decision that these individuals need to make. And I don't know how that applies to real estate. I mean, I'm not sure. I can't make the connection, but that's just an observation that I had from a business standpoint.
I guess the minor connection would just be, a restaurant is real estate. I mean, I know you've interviewed people on the podcast before. We've bought restaurants before. Sounds like you need to open a restaurant, Joe. You gotta
Heck no.
They seem very difficult to run.
Yeah.
Anything else?
Nothing else. Oh, well, yeah. Outside of Italy, outside of my trip, from a business standpoint, we got a 304 unit under contract. We're closing December the 5th, and I don't remember the last time. I think the last follow-along Friday we did, I had just closed on a property in Dallas, a 244 unit. That was August 31st. So now, we got another one under contract, the 304 unit, and so we're excited about that.
Is this the biggest deal you've done to date?
Unit size, yes. transaction size, yes, too. So yeah.
Okay.
Yep.
Well, congratulations. I've got one interesting thing that happened, and I want to ask you a question about it. See if you had any input. But I am having a lot of difficulty finding certain appliances for the unit, specifically an 18-inch dishwasher. I don't know where those things are. I mean, I was going on Craigslist. I was going on, going to resale shops that were, people donate old appliances, and they have everyone has those 24 inchers, but it's so difficult to find 18-inch dishwashers. So I was thinking, okay, so whenever I see one of these dishwashers, I should probably buy it, because like, what happens if a dishwasher goes down? Like it happened, and I had to wait, 4 weeks to replace it. Like that doesn't look good.
Yeah.
And so my question was, I wonder if you've ever come across this, but I mean, you probably have for your large apartments, but what do they do for appliance inventory at your larger apartments? Like, do they have a couple of fridges and a couple of stoves on site just in case someone's breaks and they can replace it instantaneously, or do they wait for it to break down to buy one, or how does that work for a larger apartment? Just so I can kind of figure that out and figure out how I can scale that down to my size.
3 different ways. One is you can buy in bulk and then have them stored at the group that you purchased them from, and then they'll just ship them to you as you need them, but you buy in bulk because you get that big discount. Mm-hmm. That's number 1. Number 2, you just do what you're doing. You replace it as needed from, whenever you find it, you just go and buy something from a local vendor. 3 is that you can, if something breaks down and you need to replace it immediately, you can pull from a vacant unit and then use that, and then replace the vacant unit over a longer period of time, so that you immediately address the residence issue, and then you have a little bit more time with the unit that no one's living in.
Okay, that makes sense. Yeah, so I think for the larger apartment, that vacant one would be very helpful. For ours, hopefully we won't have any vacancies, but we're at 100%. So I think, for now, I literally plan on going on Craigslist a couple times a week and seeing if I can find any of those dishwashers, because dishwashers are so expensive, and just for
what, 300?
Yeah, man, I think they're more than that.
Really?
The ones I was looking at were 500.
Huh? That is expensive.
Which I was very surprised. I was expecting $100, which is I don't know why I was
expecting
100. But so I recommend to anyone for your rentals, if you're flipping houses. If you go on Craigslist, they have some very, very nice appliances on there for sale. The ones I bought for my apartments weren't very nice.
Craigslist is local, so you don't...
That's a good point.
That's just where you live.
Yeah, I would definitely recommend checking it out if you live in a big city. Okay. If you're near a big city, because...
A big city like Cincinnati, then if we got good ones, then I'm sure anyone who lives in another big city will have plenty.
Like I saw the fridge that we have at our house for like $300 on there. I was like...
Do you also get stabbed when you meet up with the person, though?
I don't
and then they take $300 from you?
Yeah, I don't have a truck, so I have my contractor pick all this stuff up. So if anybody gets stabbed, it'll be him. All right, so that's all the updates I have. Just some miscellaneous things. You've got an interview being released on Tuesday with Josh.
Josh Dorkin, founder of Bigger Pockets. You know him. He is going to be on the show this coming Tuesday. And guess what? We did a little special thing, a 2-part interview. So this Tuesday is part 1, and then the conclusion of the interview will be the following Tuesday, part 2. Enjoy it.
We're doing mention the Best Ever Conference as well?
Yeah, we got conference. The early bird tickets are through Halloween. And if you haven't made plans to attend, then first off, shame on you. And secondly, let's go. Let's come hang out. See us in Denver. It will be a educational experience. It will be fun. And I will say that you're going to come away thinking this is truly the best ever conference you've been to, because I can say that because we had some exit interviews and surveys with last year's attendees, and that's what they said.
Awesome. And then, as always, if you're listening or you're watching, make sure you subscribe to the podcast on iTunes and leave a review for the chance to be the review of the week. This week we've got Karafus. And Karafus says, Joe is extremely knowledgeable about the business of real estate and fundraising. Always great information and no BS. He asks his guests great, thoughtful questions. He's also very well spoken and articulate, which is rare in this industry. I listen daily. So I thought you like that well-spoken, articulate part.
Yeah.
I have to agree. You do speak very, very well.
Well, unless half my face is numb from the dentist chair.
This is perfect for today, then.
Yeah, perfect for today. Well, thank you for those wonderful words. I sincerely appreciate it. And the show is because all of you listening, that's what really drives us. So grateful and much appreciated. besteverconference.com is the website. I wanted to mention that. Well, Theo, enjoyed bringing it back.
Yeah.
And Best Ever listeners, grateful you are listening. Looking forward to talking to you soon.